Welcome to the Meat and Potatoes podcast. Today we're here with John Briggs, who is the CEO and founder of Incite Tax. How are you?
I'm good.
So are we going to be talking tax and accounting, or are we going to be talking entrepreneurship?
Let's talk entrepreneurship as much as possible.
Okay. Darn it. I was looking forward to talking about.
Happy to give tips, but I don't want your listeners falling asleep if they're driving.
Yeah, this is for entertainment, not sleeping.
Right.
Aid. Okay. Founding story of Incite Tax.
Well, so it'd have to start back with my experience at Deloitte. So I have a master's degree in tax from BYU. And one of the great things about that program is, man, your second week in the junior year of your program, you're interviewed by Fortune 100 companies. So I get a job offer out in Orange County with Deloitte. And I get there and, it was a good experience. It's exactly what they told me it was going to be. But there's a few things that bothered me about it. So I had an internship and I was going to get the job offer. And then once I got the job offer, I was going to get promoted, all based on this magical concept of the billable hour. Wow, that sounds great. Okay, but you don't control your workflow as an intern. So when they assigned one thing to me, I didn't want to be penalized for being smarter and more effective than the other two people I was competing against for the internship. So you take your sweet time. And there's only 2 or 3 people in the entire office at the accounting program who actually control the workflow. If they give you 6 or 7 things to work on, you can crank through it like a normal workflow. So I found some flaws there because what happens is the client is the one who ends up eating that inefficiency. I didn't like that very much. I also didn't love this idea of, hey, put in 60 to 80 hours a week for 10 to 15 years, and maybe, just maybe, you'll become a partner in the firm. And when you reach partner, we're going to sell it to you like this glorious thing, but you're going to still work, 50 to 60 hours a week.
Yeah.
So there are some things there that I didn't love. So that kind of shaped my philosophy of, one, whenever possible, I would rather invoice and create things based on value creation and value exchange than I would how much time someone's putting into it. I also didn't love the idea, again, of the partner stuff. So we've created a unique model, which we can get into as far as business philosophy, where we have our accountants have an opportunity to effectively enjoy the status that they're sold on of what partner means way earlier in their career without the unconscionable amount of hours that they would have to work and like giving up their life outside of work. So those kind of things formulated how we got going. And of course, I was just myself at one point in a 10 by 14 office with no windows, suffering through stuff, wearing all the hats. I took the fearful step of that first hire. And then, we've since grown. There's 37 team members right now, and there's no slowing down, right? It doesn't look like we're going to be slowing down anytime soon.
Gotcha. And a lot of folks listening operate SMBs and companies of various sizes and industries. But the one thing they all have to do is pay taxes. Is that correct?
That is correct.
All right.
Yeah.
So there's some advice.
Pay taxes, yes. Even if you don't want to, you can go to jail for it.
Yeah. And that's the old IRS, right? Gotcha. Okay. So if you're an entrepreneur and you're wearing all the hats, or even if you're just still wearing 1 or 2 hats, it's stressful. It's your baby. You've got responsibilities. You've got all these ancillary stuff like real estate and janitor and all these other things, including like taxes, right? So that's the service that you guys would provide, is to take that off their plate, correct?
Exactly. Look, we do thousands of returns a year, and a normal entrepreneur, if they're doing it themselves, they're doing 1 tax return a year. We're just seeing a lot more of the do's and don'ts. And so we can know the ins and outs a little bit better. And if you have a little bit of cash to leverage that, a good accountant is going to save you more money in this like tax savings than what you actually pay them.
Yeah. And it'll be a lot more accurate, and you probably won't end up in jail if you do it wrong, right?
Right. Well, and then you don't also have to give up however many weekends it takes you to first procrastinate getting your stuff together. And then once you actually get it together, sitting down and putting it together and then wondering, am I putting it together even the right way?
Yeah. I imagine for first-time entrepreneurs, it's all brand new, right? How much, when to file, all of that.
How to file? Did I choose the right entity? Wait, what's an entity? Yeah, can I write this off? What's a write-off? Yeah. There's a lot of questions like that a good accountant's going to help you get at least a foundational understanding.
Yeah. And then you guys are in favor of your clients saving money, right?
We are, yes, in favor of them saving money. We actually think the government sucks at spending the business owner's money. We think the economy is better if business owners keep more of their money. And we also know that the client is the one who pays us, therefore pays our bills, therefore puts food on our own personal tables. So we'd rather they be our client as opposed to us working for the government. But unfortunately, in the accounting industry, you get that a little bit with CPAs, where you're like, wait, are you an undercover IRS agent? Like, I don't understand why you're not helping me. It doesn't seem like you're very helpful.
Yeah. And so being helpful would be doing good, clean, accurate work, affordable rates, and then letting them know of the write-offs and best systems and processes to do it, right?
Yeah. So the tax code's 76,000 pages, all created because large companies pay lobbyists to get special treatment. And that special treatment is just as applicable to small business owners. So having someone who knows what those are so that you can actually use legal tax strategies to lower your taxes, it's better. I mean, at the end of the day, your tax bill is one of your largest lifetime expenses. You might as well reduce it as much as possible.
Yeah. And you mentioned, starting as one employee, and you're up to 37. You guys would need to innovate and grow your company internally to scale that. What are some ways you guys have done that?
Well, when you say it, what I'm reminded of is like, there are some milestones that we've hit where it's like, am I completely destroying the inside of my company to build it back up? And yes, you are. Because one person can get to 100,000, 500,000, depending on your industry, right? Once you get to 1 million, then it's, I got to add some people. And then once you surpass that, it's like, okay, I can't even manage all this. It's not good for me to have 26 direct reports.
Yeah.
So some of the innovations that we've done, they're not rocket science, right? It's like we have to first add the layer of a leadership team that isn't just me as the founder. And then from there, because each of them now are more hyper-focused on the areas that they're responsible for, you give them flexibility and ownership over improving what they're responsible for. So they can come to you with ideas like, hey, we're doing it this way, this doesn't work. Currently, our biggest kick is automation whenever possible. We have a decently expensive CRM that we use, and there's a lot of features in there that we hadn't been taking advantage of.
Mm-hmm.
But now it's great because we have certain things, and every business has processes, right? You're selling your product or making the product. Usually it's following the same steps every time. We have that as well with our service-based accounting stuff. And so if a client emails us something, well, that can automatically trigger what the follow-up email is going to look like. And so that's we're trying to free up as much time as possible so our accountants can have as much face-to-face interaction with the clients, saving them money, helping them understand their cash flow and things like that.
Yeah. And so a typical client, because this is kind of the busy season for you guys, right?
It is the busy season, yeah.
Yeah. Well, thanks for carving out some time. They come to you in whatever form and sign up as a customer and go through it for the first year. What is the time allocation for one of your team members per client on average?
Man. We do a lot of small business, and so probably on average, you're looking at a 30-minute meeting on the front end of the tax return. Probably an hour to an hour and a half of work between inputting it, reviewing it, signing off on it. Maybe a meeting at the back end to explain to the client, make sure they feel comfortable with what's going to get filed. So from a tax standpoint, probably about 2.5 to 3 hours per tax return type of scenario. But then bookkeeping, you're a couple hours a month. If they're consulting, usually they're paying specifically for an hour meeting once a month. But it varies.
Okay. And I've had a few, friends whose parents were entrepreneurs, and they would keep every receipt, and like even they took some stuff to DI and got a little receipt, um, and it was like in a shoebox or a folder or file, So I imagine those ones still occur.
Yeah.
And those are probably more time consuming, I would imagine.
They're a lot more time consuming. I'll just tell everybody listening though, most accountants nowadays fire clients if they come in with a shoebox or shoe boxes. My most extreme example in my career, I had a guy walk in with 8 shoe boxes, and I was just like, this is going to be really expensive, right? Like I have to go through that.
Yeah.
You're like, yeah. Because they have to be added up. If you're not adding it up on your own, someone has to add it up. You can't just make up numbers.
Yeah. And so once they are a client, do you guys have software that you recommend or systems and processes that you guys recommend for them to make it so there's no shoe boxes?
Yeah, I mean, look, QBO, QuickBooks Online, Intuit, they kind of own and dominate the small business accounting market. You have other players out there. I know other accountants, they love Xero, for example. We don't love it because the reporting function sucks. And quite frankly, I think the only purpose to do your accounting is to have a reporting function. One, yes, you have to report annually your outcome to the IRS. But more importantly, on a regular basis, you should be looking at the outcome of your numbers because it can help you determine the areas of your business that are probably struggling or the areas of your business that are blowing it up, and you should focus more on that. You need that feedback and that reporting function feedback. So we really recommend QuickBooks Online. That I wouldn't have recommended QuickBooks Online 5 years ago, but they have come a long way. And obviously Intuit makes a lot more money charging a monthly fee as they do just the software cost. And so they've put a lot of development into it to make it better. And it's very easy to use. It's user friendly. But don't mistake that for, if you don't understand accounting, you definitely can mess up your accounting because it is so user friendly and it just lets you do some stuff sometimes. And we've come across some random scenarios with people who've done their own accounting that really wasn't beneficial for their tax outcome.
Yeah. And even if you don't know the 76,000 pages of tax code, if you still make a mistake, the IRS isn't going to care, right? Because it's still your fault.
It's still your fault.
Okay.
Yeah. Now, luckily, if you file, they rarely will put you in jail for making a mistake. They will charge you a lot of interest and penalties, which I look at that as unnecessary payment going into the black hole of their spending. So we do want to avoid that as much as possible. But if you get the letter from the IRS, you're probably not going to jail. Only the Wesley Snipes of the world go to jail, where they try to argue like, I don't have to pay. I don't have to file. Like, you can't do this. It's a voluntary system. Like, no, it's a voluntary reporting system. But you are mandated to volunteer to report it.
Yeah, that is very true. And so I noticed on your website there's a kind of book, case study type of thing on microgyms. Talk a little bit about that.
So earlier in my career, I was reading a book called The Pumpkin Plan. And the author, Mike Michalowicz, compares a prize-growing pumpkin farmer, the guys who grow the 1,000-pound pumpkins, not just I have a pumpkin patch, like the big old ones.
Yeah.
It's like, what the junk are they doing to get such a big pumpkin? And it just happens that that's a great analogy for finding a niche market for your business. Because they grow out the vine, they pluck off, like any pumpkin that it looks like it's failing, they're plucking off 90% within the first week. And then after another week, they go back through until they isolate it to the one who seems to be sucking all the nutrients, because you want everything else off the vine. Idea is same with niching, right? And one thing I love about Mike Michalowicz is that in his books, he provides a lot of practical tools and applications. And so I did all of his steps. And from a niching standpoint, we realized, wow, we had a decent amount of gym owner clients. So for those who aren't sure what a microgym is, it's basically anything that's not a Globo gym, boutiques, fitness studios, CrossFit, F45, those types of karate studios, they all can kind of consider microgyms. we had a bunch of them, and we really enjoyed working with them. Sometimes when we come across really highly educated professionals, because they're super smart and really good at what they do, they automatically assume they know a lot about taxes, and they're not as fun to deal with.
Yeah.
Because then you're like, more of like, I'm trying to convince them that I know what I'm doing. Gym owners just like, dude, I know what I don't know.
Yeah.
Here. So we started down that road, ended up getting quite a few. And then I went to this event for CrossFit owner affiliates, and they did a workout as part of the event. I'm just a vendor there trying to teach them about taxes. And they did this workout. I'm like, I don't even know what happened. I felt like I was in a car accident. It's like, well, at one point I was upside down. I know we flipped a couple times, but I don't even know what I just witnessed. I mean, they were like doing all sorts of movements that I now know what they are, but it was insane to me. And I realized in that experience that I don't actually understand my microgym owner audience. So, like most CPAs, I'm just kidding. I was like, you know what? I'm going to buy a gym to understand what they go through. So I became a 50% owner in a gym, and it really helped me get to know them. And then I realized we're teaching this cash flow management system, but it needs to be specified for the gym owner. And so I wrote a book, Profit First for Microgyms, that explains how to manage their cash specifically in like a boutique fitness studio type of scenario. And I say this all over the place. No one's ever corrected me, so I still think it's accurate. We have more microgym clients than any other accounting firm in the country. So we are kind of the experts in the space. But all those experiences like have led us to be able to make that claim, to get the clients to actually provide the value to them.
Cool. And there's a lot of those spread out across America, right?
There's tons.
And so you wrote a book. What was that like?
It was hard. I still don't consider myself an author. We haven't sold a ton. Last month we just surpassed 3,000 books sold. But the experience itself was actually really good because it allowed me to hone the way we communicated what we wanted them to know. Which as an accountant, and maybe your listeners can relate depending on their expertise, but sometimes we get so used to the vernacular and the words that we use, the acronyms, that we realize the people we're trying to serve have no idea what the heck we're talking about.
Yeah.
So it allowed me to really simplify and communicate in a clear way the things we wanted them to understand. But it was an entire year process to write that book. I read through it 28 times myself personally, through all the different edits and rewrites and everything. And I don't want to read my book again.
Yeah. I mean, that's impressive. And writing a book's not for the faint of heart. I've never done it, but I'm just amazed at those that have done it, let alone like 3 or 4 times.
Yeah, some of these guys, they crank it out one every couple of years. It's good for them.
And so what are like 1 or 2 kind of cool things that you found through owning the gym and then writing a book about it as it regards to like your guys' product and philosophy, cash flow, and all of that?
The gym space is interesting because, we had a level of success with the accounting firm, and we're pretty good at finding people interested in using our services. I actually never perfected that. I sold the gym last June, and the guy who bought it, he's so much better of a gym owner than I was. I did it. But part of the problem is I did it to understand gym owners as opposed to like growing a business.
Yeah.
But so as a CPA firm, I've never had a client come to me and say, have you ever considered doing this in your business? I think you should be doing this. Where as a gym owner, every day, every week, 3 or 4 members, hey, you should really do this to the gym. You should add this service. We should be doing this. We shouldn't be doing this. I don't know what the disconnect is with the consumers of, fitness, but for some reason they just think they know exactly what needs to happen, even though none of them are business owners who are making these suggestions.
Yeah.
They don't have any experience in the gym space, but they just, it needs to be done this way. So that was eye-opening to me.
Yeah.
To experience that. And like, learning how to be polite to them, but basically saying like, look, you probably understand about 5% of what the gym actually is go like, what's going on here?
Yeah.
If you want to sit down with the finances, we could go through it. And then you maybe realize like, oh, I should keep my suggestions to myself. Stay in my lane, right?
Yeah.
That was a big one. And then the other one, which is a little bit more specific, but when I was writing the book itself, we had been implementing this system called Profit First for gyms for quite a few years before I wrote the book. And there's an element of it where we're trying to explain this concept called real revenue, which is you have your gross revenue and then whatever direct cash you're paying out to actually create the revenue, we want to subtract that out. So it's easy to understand it from a building standpoint. If I'm building a house, the contractor might get a payment of $100,000. Well, $90,000 of that's material.
Yeah.
So he actually only made $10,000. So trying to explain that to gym owners with their business, and then the way they pay coaches, some pay them by their employees, sometimes they're 1099, sometimes they pay them a flat rate, sometimes they pay them an hourly rate, sometimes they pay them a price per number of people in the class, sometimes it's a percentage of revenue. It's all over the place.
Yeah.
And usually we would customize the cash flow plan based on exactly how they were doing it. So I'm typing this up in my book, like walking through the process and effectively a decision tree of how we help gym owners. And then I kept rereading it. I'm thinking, I'm confusing myself at this point. This is so complicated. This is dumb. And so it allowed me to look at that scenario and say, oh, you know what we can do? We know what the most they should be spending on their team to be a healthy, profitable gym. Let's just give them that number. So then it just became, we don't care how the heck you pay your coaches. Yeah. Whatever method you used, you don't want to be over 44% of your revenue. And the really financially fit gyms are 25%. So if you're between 25 and 44%, you're good. Oh my gosh. So in 2 paragraphs, I simplified something that had taken me 3 pages, and it was just a giant mess and really confusing.
Yeah. That's very cool that you're providing value even beforehand, right? Like, I guess they'd have to buy the book, but pretty cheap for the value there.
It's a pretty good investment, I think.
Yeah. Good ROI. What are a couple more questions? What are the hardest industries or companies to service?
Well, so manufacturing is hard. Because a lot of times when they hire the accountant, they really are kind of hoping the accountant saves their life and is like the magic bullet. But at the end of the day, like the ins and outs and material, like costing your material and finding the right supply chain, especially now, like that's so super involved. Like we are definitely, I would say you would want to find an accounting company that is so niched in that. So we've always struggled serving those people. And then not necessarily industry, but anytime there's multiple partners, like 3 or more, it's hard because they all have disagreements. They all know people like, well, this a guy can help me over here. And it's like, well, can you do 35% of the tax return and someone else can pick up the other part? And well, here's a great strategy. Oh my gosh, that's awesome. And then they don't give you FaceTime with the other partners so you can explain it to them. So they try to explain it. So now we're playing a game of telephone.
Yeah.
And then it's like, oh, sorry, I told them about the strategy and they said no. I'm like, well, you probably told it to them in a way where they're like, this is illegal. We're going to go to jail.
Right.
You know, it's like
lost in translation.
Yeah. So those have always been hard to work with.
Yeah. So kind of a recurring theme is it's good if you get to explain people based on your industry experience how to do it instead of have them tell you how to do it, right?
Yeah, right.
Okay.
Yeah.
Very cool. And then ultimately, do you guys on your team have folks that are focused in on specific industries, or is everyone capable and a generalist and can do everything?
Yeah, I mean, I don't love the term generalist because, again, like my manufacturing, we usually just tell them, like, look, we're not usually the right fit. A lot of service-based companies, I know it's fun to think we're very unique, and as a person, you are. So don't lose that message. But from a tax standpoint, like, it doesn't matter what the service is 95% the same as all other service-based businesses. We obviously have a great expertise with microgyms, but we deal a lot with real estate brokers, real estate investors, because those are 2 different things. So those are probably our three highest concentrations, but across the board, a lot of service-based companies, because the tax treatment is pretty similar across the board.
Yeah.
I mean, you might have some, like one of my favorite clients, he produces documentaries. He calls them docuseries. And so like researching and learning film specific credits that he has available to him, like, so that's fun. But again, that's like 5% of the strategies we implement, because the other stuff applies to everybody else as well.
Yeah. And I can imagine your clients in a good relationship are always just kind of happy, right? And kind of enlightened as to the money they can save and the time they can save. Because that's what you guys have put in all the blood, sweat, and tears, is to be able to explain it coherently, quickly, right?
Yeah, totally. I mean, why do all that research yourself when really you didn't create your business to become an expert in tax law? Like, just, yeah. Your better return on your time is to do your passion.
Yeah.
And then, manage your cash well so you can invest in other people.
Yeah. All right. One day in the long, long distant future, you'll be on the porch with your grandkids in a rocking chair. Is the tax code going to be bigger or smaller?
Bigger.
Oh, damn it. I thought you were going to say smaller.
I wish it's people don't know this or remember it, but George Bush II, when he was president, he actually got a committee together and said, you guys have the ability, if you choose and do the research and come up with something, to completely nix the tax code. I want it simplified. I'd like to shorten it. I think it needs to be simpler for more people to understand. So do that. Let's simplify it. They added 2,000 pages to the tax code.
Cool.
Yeah. I mean, because part of the struggle is, especially in the U.S., is that politicians run on the tax code, basically. If I'm in this world, so I think about it a lot, but ultimately the government uses taxes to encourage or discourage certain behaviors that they want us to do or don't do. And so we've grown accustomed to certain of those behaviors, and they've basically become sacred cows that no politician is going to be willing to take out of the tax code, even though what they could be harming, they could just be unnecessary, they could be too complicated. But no, every time there's an election series, and then of course, if people don't want to do it and the government says you can't legally do that, they turn it into a tax.
Yeah. It's a vicious cycle.
Yeah.
Gotcha. All right. Last question, meat and potatoes section of it. How do you structure your day and how do you allocate your time to be as productive as possible?
So I like to work out first thing in the morning.
But you don't have a gym anymore, so.
I don't own the gym anymore. I actually still go to the gym that I sold. Okay. Again, because he does a great job. So, I've tried in some points in my life to do that at the end of the day, but I just get so mentally fatigued that I don't have the discipline. So I got to do it first thing. Come home from the gym. We got a puppy around Christmas time. I do a quick training session with the puppy, I guess they're still considered a puppy, but anyways, we do a quick training session, take my time. Like, it's just, at that point, the house is empty, the kids are gone. So it's kind of like while I'm doing some stuff, it's a form of meditation for me. Come into work. And then, I know the question is, how do I structure my day? But part of that is I have to structure my priorities. And so currently the priorities I have 3 priorities I'm working on, and I've scheduled them in. Like, here are the time slots during the week that I want to work on these. And I have to honor that because they're bigger projects that I had been putting off, had I not scheduled it, right?
Yep.
And so depending on the day, one of those 3 things are probably falling into the day, and then I have to honor that. I do like meeting with my team. I don't love meetings because I know they can be dangerous and a complete time suck of wasted time for everybody. I get that. So we try to keep them as effective and directed as possible. But I have one-on-ones with all my direct reports once a week. And depending on the day, that might sometimes all 4 of them are in one day. We have a weekly team meeting, and I'm usually doing some sort of training. And so I might have to be prepped for that a little bit. But all my day I shouldn't say all my day, about 80% of my workday is focused on being a support to the team, helping them grow, helping them learn, helping them develop. And then I still have some clients that I manage. And so that's probably the other 20%.
Very cool. Well, this has been fun, and I knew it was going to be, even though we're going to talk about taxes a little bit, because it's an interesting business model, and the way you guys have done it is very cool and entrepreneurial. And tax advice is just pay your taxes. That's a safe one.
Pay your taxes, but if you haven't ever had an accountant look at it, you're probably paying more taxes than you should.
And you could probably help them with that.
We could definitely help them with that.
Very cool. All right. Thank you, John. Appreciate it.
Thank you.